Tesla new cars registration in Spain jumped 73% year over year, reaching almost 1,600 units. That's huge, especially compared to the overall EV market's growth in Spain, which rose about 55.5% in the same period. So, what does it mean for Tesla, the broader EV sectors, and investors? Today, we'll break it down, step by step, sector by sector, and show you how to take advantage of the momentum. Let's get to it. To actually understand Tesla's Spain spike, we have to talk about numbers. The new Tesla sale in Spain surged 74% year over year in February. March 2 Reuters said, Tesla's new car sales in Spain rose 73.7% in February from the same month 2025 to 1,600 vehicles. Registration data from industry from AFNAC showed on Monday. While the total sales of electric vehicles, a category that includes both fully electric vehicles and hybrid, grew by 55% based on sales car in Spain. Now, the question is this: why Spain? Spain is actually a growing EV market in Europe. Government incentives for EV buyers, including tax reduction and subsidies for low-emission vehicles, encourage adoption. Tesla pricing strategy for the Model 3 and Model Y are optimized for local demands. So, for the early registration, the indicator shows this. The spike often precedes deliveries by a few weeks to months. Investors can treat this as a leading indicator for Tesla upcoming European delivery reports. Now, the market context. Tesla via European EV markets. Overall EV registration in Spain increased 56% year over year. Tesla shows exceed the market average, showing relative outperformance. Now, the comparison to the other markets. That comparison shows that Norway and Portugal are also Tesla hotspots, but Spain's growth is notable due to the large overall market size. Now, Tesla regaining Europe market share after some months of competition from BYD and European EV markets. How about the investors' takeaway? The country level data can give early insight into global trends. If Tesla gaining share in Spain, it may indicate a strong demand in the Euro markets as well. The sector implication tells this: the energy and battery of the EV growth drive lithium, nickel, and battery demands. The key suppliers are Panasonic, KTL, LG, and GM. So if Tesla continue European growth, battery suppliers will benefit. The EV infrastructure show Spain needs more charging stations to support growth. Companies like Iberdrola and charge point operation could see investment inflows. Automotive competition. Tesla growth puts pressure on Europe EV competitors, including Stellantis and division Volkswagen, ID Series and BYD. So investors can track their sales to see market share shift. Now, the stock implication. Tesla stock. The country level registration spikes and can affect sentiment, especially in the pre-market or earnings periods. So short-term trading opportunity may appear if investors anticipate stronger than expected deliveries. The sector of ETFs like energy, battery, and EV related to ETFs may move in tandem with Tesla's growth. Example, lithium, cars. This provides a diversified way to play the EV boom. How investors can take advantage of this situation? First, direct Tesla exposure. Because buying Tesla if you expect continued European sales to grow, and watch for upcoming quarterly delivery reports. The Spain registration are an early signal. Definitely. Now, the battery and component suppliers like companies like Tesla Semiconductors and EV companies benefits from higher EV penetration. Example of tickers, Panasonic and KTL. The infrastructure and utilities are very well positioned because charging station operators and electric utility supplies EV demands see long-term growth. Example, Iberdrola and Endesa. The risk to consider here, because the local spikes may reflect government incentives rather than organic demand. The competition from BYD, Volkswagen, Stellantis still may affect Tesla European market share. The macro factors like interest rates, chip supply, and electric costs can impact sales. For investors, you have to diversify exposure, use stop loss, and track delivery data alongside registration. Now, looking at the chart, what are actually saying? Dear investors, when we look at the chart, yesterday, based on the news, the 73% create a big push on Tesla by 5% growth and gain. Look at this. Now, investors should also be worried about the risk of buying because of the news, because market don't move based on news, but based on expectation. The 74% gain on Tesla in Spain create expectation. And that expectation has to be a long-term one, because if the market continues to have this kind of expectation, the market will still continue to grow. Okay, but wait, why? Why can we not buy here? Because we are still in the major level here. The market has been coming down to this level trying to break it. Why is the price trying to break this level? Why not continuing? The answer is very easy and simple. Because down here lies this level right here. An order block will create a big push that breaks the all-time high, the previous all-time high, reaching almost $500. Why this level is important? Looking at the weekly time frame. When we look at the weekly time frame, we have this level here if I want to draw it properly. This level creates a big push in the market, fair value gap, a big gap, breaking this all-time high. Now, what we see is this. Based on the news yesterday, the market surged 5%. But don't get excited yet. We are still on the early of the week. So, based on this, if the weekly time frame, the weekly charts, the weekly candle break above this level right here and close, we might continue to wait for a small dip for a continuation. But most likely it's not the case. Remember, whenever you use tradings or you invest, there's always liquidity that has to be collected before a big push, and that happens all the time. Here, collection of liquidity, touching the 200 moving average, expansion, collection of liquidity. Based on history, it has always been the case. Collection of liquidity before expansion. Same thing here. So right now, the market hadn't collected any liquidity, especially on the weekly time frame. And where lies the most liquidity pool in the market? Exactly right here. So this news might be a trap, like most of the news, but I'm not asking you to avoid it. I'm asking you to watch closely, because the most likely scenario is this: price breaking this level here, which is not a major level in terms of the weekly time frame. Breaking this level, coming down to this level here, the level that created a big movement before continuation. But here's where the devils rise. Because look at this. Tesla has an history. That history is very easy to read. They always touch a 200 moving average and use it as a catalyst to break a new high. Let's look together. 200 moving average. The price break the 200 moving average, coming back to this 200 moving average before continuation, near the 200 moving average, touching the 200 moving average here before continuation. Where are we right now? Very good. We are still on the 20 moving average, on 15 moving average interval. So this spike might call us to invest, yes, but in the long term, 1 month, 2 months, or 6 months, we might still come back to this level, because this is called price movement. It has always been like this and will be always like this. So the price coming back to this level, guys, we just collect all this liquidity, this double top here, very appealing, because down here lies a big liquidity pool, capex, investment, fear, and others. Coming down to this level, creating some kind of consolidation for 1 or 2 months, collection of liquidity on the daily, expansion. This is Tesla. Now, for investors, I want you to be cautious. I want you to observe, because like I said, when you look on the daily time frame, this push of yesterday created almost 5% gain. Now, what lies on top here? Because the market have been going on the series of lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now consolidation. This big push here. We cannot just get inside blindly, because we did the same mistake here, getting inside, and now we are almost here near the stop loss. So what I want you guys to do is this: observe, be patient, do not rush, because the market has always been doing the same thing over and over. Reaching the 200 moving average on a daily, big push, yes, but look at this, breaking this level, look at this, dancing around this level. This might actually be a big step to enter the market, but we have to be cautious of this level. That was all for this video, guys. If you like this kind of videos, let me know in the comments. If you have any recommendation, or if you have any idea, because we learn every day, let me know in the comment. This is actually my personal takes, because investing is actually risky. Thank you for watching, guys. Trade safe and have a nice day.